Are we starting to see a top in the housing market? A peak in home prices? Should you buy now? Should you wait? We're going to take a look at the most recent data in the housing market, and you don't want to miss it, so stay right there. Welcome back. My name is Dale Corpus. I'm a realtor in the Tri-Valley area in the East Bay of the San Francisco Bay Area, and I post videos every Friday about all things real estate. We're going to talk about the rise in interest rates, peaking near 5% this last week, and at the same time, we're seeing headlines saying there's a drop in buyer demand. So what does this all mean for the real estate market as we move into the summer? Is it going to be easier to buy a house with all of these changes happening? Should you even buy a house? Should you wait for lower home prices? I do believe some changes are on the way, and I do believe those changes are going to impact the housing market and how you approach it, but it might not be what you think. We'll dive into that data to help you become a better buyer, a better seller in today's real estate market. And today's video isn't to get you to buy a house, it's to inform you, provide you the information so that you can make a sensible, informed decision when buying real estate. And at the same time, I want to mention real estate is local. So what's happening in your market might be a little bit different than what's happening in my market. So just make sure you're in tune with what's going on in your area so you can make the best decisions for you. So over the last couple of months, we've seen a crazy surge in home prices due to a lack of supply and rising buyer demand because there's so little homes to choose from. There's a lot of buyers wanting them, pushing home prices up because of multiple offer situations and what have you. But over the last couple of weeks, in fact, since the beginning of the year, we've seen interest rates rise almost 2% since February 2022. We've seen interest rates peak nearly at 5% for many home buyers out there. So rates have jumped substantially, which is definitely going to put a damper on homes, right? You're likely to see buyer demand drop off because of this. And in theory, you're going to see some supply build. Now, how much supply is actually going to build is going to be the question. If you see supply rise substantially, you're likely to see a huge slowdown in the housing market where you're not seeing appreciation. You're seeing more flattening across the board. But if you see supply build slowly because sellers out there reconsider whether or not it's good time to sell because interest rates have risen so much, even a flattening in that housing market requires them to pay significantly more money for that next house. If those sellers stay put and supply stays low, you're likely to see a market kind of continue to move sideways to up without really any changes in the housing market other than competition. And that's what I want to spend some time here and talk about today, because I think that is going to be one of the biggest changes in the housing market. But before we dive into that change in competition, so to speak, I want to talk about what's driving interest rates. Why are we, rising so much over the last week with regards to rates? So many of you know, a couple weeks ago, the Fed came out and raised the Fed funds rate. They raised it 0.25%, which the market was expecting, and the market continued to kind of chug along after that. And since that 0.25 point rise, we've seen Jerome Powell come out and say that they need to get way more aggressive with regards to their fight on inflation by raising the Fed funds rate, more aggressively, if you will. And the market reacted irrationally at that time, and interest rates shot up because, that would put a huge damper on the economy, likely to send us in a recession, which could potentially create additional issues. And so the market didn't like that. Interest rates went up significantly. And so last week we closed at the highest rates that we've seen in over 3 years. And so we haven't really seen at the moment this impact play out on the housing market because it just recently happened. And typically speaking, it takes things like this weeks, months to play into, housing where we actually see any significant changes. So we're kind of at that very beginning of what I think are going to be changes that are likely going to slow the housing market, which is going to bring us back to what I mentioned a moment ago in that competition. I do think you're going to have competition in the market because we're coming out of an environment where there's been multiple offers on every single property. Well, many properties out there, 10, 15, 20 offers. And with the rise in rates, you're likely going to have affordability issues for many of those home buyers out there, which is going to make it more difficult for them to qualify, which is going to put pressure on those buyers and make it difficult for them to qualify. Maybe they no longer qualify for that price point in which they were looking. So buyer demand, it's likely to drop off. And there's a lot of willing buyers out there. People that want to buy property, but as interest rates rise, home prices become more expensive. The able buyer demand starts to slow down and you just don't have as many buyers that can qualify for those higher price points. And therefore, competition is likely to slow down to some regard. Now, if you're a buyer out there, that slowdown in competition might give you an opportunity to get into the housing market. But at the same time, there's going to be people out there that worry that, with rising rates, our home prices are going to pull back. Is now a good time to buy? Or should I wait? And that's a reasonable question, Something I often address is if you're only planning on holding a home, being in a home for a couple of years, 2 to 3 years, it's probably not the best time to own a home. But if you're planning on being in that home 7 to 10 years, 5, 7, 10 years, it's kind of always been my go-to. I think buying a property, as long as you're buying it for the right reasons, not getting caught up in FOMO, not trying to recreate what your friend did and make 20% in a year. You're buying because you need property, you have money in the bank, you're not stretching yourself. Now is a good time to become a homeowner because you're going to have less competition out there. And until supply increases significantly, you're not likely to see any huge pullbacks in the housing market. Here where I'm located in Contra Costa County, we're operating about 25% of the inventory we would be operating at this time of year prior to 2019. So we have way less property than we normally would, which is why you've seen home prices rise so quickly. But on average, here in California, we've seen home prices rise about 3 to 5% over the last 30 years, even with those pullbacks in the market. So even if you do see some slowdown in the market, you're not likely to see any huge price declines, which is important to note, especially if you're a home buyer out there. The subject, I want to take a minute here and just talk about what it looks like as a home buyer today versus what it looked like 6 months ago, a year ago with that same property. So if you were looking at buying a property, say a year ago for $500,000, an interest rate of 2.75%, which is worth 30-year fixed rates at that time would have been a payment of $2,041 per month. Now, if you take that same property and let's say it didn't appreciate at all, which it did, but just take that, that same purchase price of $500,000, that same loan amount of $500,000 and use today's interest rates of 5% on a 30-year fix, that payment today would be $2,684. That's a 31% increase in the monthly payment in just a year because of the rise in interest rates. And that's not even taking into consideration the appreciation. Now again, I'm not out here telling you that you need to buy a home. I'm just telling you that if you are looking to buy a home, you're likely to see some changes start to play into the housing market over the next couple of weeks to months, which is going to create a slowdown if interest rates stay up, around that 5% number. You're likely to see a market that slows down as we move into the summer months, right? And the summer is typically an active time in the market, and then it slows down more into the fall market. So if interest rates continue to stay up, you're likely to see more supply build. You're likely to see buyer demand continue to diminish because it's going to affect more and more home buyers, because some of these buyers that can qualify are going to get into a property, and eventually that buyer demand is likely to dry up some unless you see a pullback in housing prices. Now, I don't believe that's going to happen, but it's something that you've got to pay attention to in your housing market. And if you see properties start to sit on the market significantly longer than they have been, average days on the market over the last couple of weeks has been about 20 days, average days on market across the United States. So if you see those numbers start to double and you see inventory start to build, then you're likely to see the market slow down. Now, again, I'm not a believer that home prices are going to fall back significantly, but I do believe if interest rates stay high, it's likely to put a top in the housing market, at least for the short term. Now, I've said before, I don't believe interest rates can stay high for any extended period of time. I do believe at some point they will pull back. The question is, when they pull back, where is supply at that time? If supply stays low, the housing market probably continues to move, sideways to up like we've seen in the past. Now, if interest rates pull back, but we have a huge amount of supply, then you're not really likely to see much change in the housing market at that time. So at the moment, there's a lot going on, a lot of volatility, a lot of irrational thinking on both sides of the coin. So if you're a home buyer out there, just make sure you're making the best decision for you, not getting caught up in what your house value is worth tomorrow, and focusing on whether or not you can afford the payment and being comfortable with it. If you found this helpful, do me a favor and give it a thumbs up and subscribe to my channel. You may also want to check out my past video on the top 10 mistakes when buying a home. And the link to that video is on the top corner of this screen. Again, I'm Dale Corpus from eXp Realty in San Ramon, California, and I help buyers and sellers throughout the Bay Area and Tri-Valley, and I'll see you on my next video.